Is Abenomics working? That's been the question on the lips of Japan watchers for many months now. Well, we've had a slew of government data released today, and with me today to discuss it is Izumi Devalier from HSBC. Izumi, thanks for joining us.
Thank you.
Let's start by talking about the CPI number. It seems odd to be getting excited about a number that's flat, but this is good news, isn't it?
Sure. The core inflation returned to positive territory, or 0.0%, for the first time since October 2012. It jumped up 0.4 percentage points, which is a huge increase. I would caution, though, that the increase was mainly driven by cost-push factors as well as technical reasons. But still, it's an impressive feat. And I think what's important is that it has the potential to raise the public's inflation expectations, get Japan out of that deflationary mindset.
Okay, moving on to the industrial production numbers now. They have exceeded expectations by quite a large amount.
Right.
What does this tell us about the economy?
I think it shows that despite the cool down in regional economic activity, Japan's manufacturing sector remains on a pretty firm footing due to very strong domestic demand. Well, I actually think out of the data that was released today, the manufacturing numbers, including the PMI and the above expectations IP print, were the most impressive for that reason.
You mentioned other countries there. Now, China in particular appears to be weakening. Why is Japan looking like it's different?
I think there are two factors that work in Japan's favor and that make Japan's case unique in this environment. One is that because of the yen weakening, we're seeing a gradual improvement in manufacturers' competitiveness. Export volumes are slowly beginning to rise, meaning that the increase in exports isn't just all about value and the yen translating into higher profits. So I think with the yen, the weaker yen, increased competitiveness and the unique domestic demand factors will cushion some of the blow that might come from chill in regional economic activity.
Now, one of the key things of Abenomics is attempting to grow capex from Japanese companies. Right. Can the government really get companies to increase their spending in Japan, or is this going to go overseas?
I think a little bit of both. I think the government understands that translating all this near-term improvement in economic activity to things like increase in wages, employment, investment, to lasting, things that will make this a sustainable recovery is key. So they've been trying a lot of things, introducing a lot of policies to try to stimulate domestic investment, which has been really lagging. But I still think that this is going to take some while to catch up. It usually takes 2 to 3 years before you see the improvement in corporate profits translated into much higher hiring and investment, because it requires confidence by managers in the long-term sustainability of the economic recovery.
Well, the headline number for unemployment is flat, but beneath that there's been some movements. Can you explain a little bit about what they mean?
One of the reasons why unemployment didn't come down as expected was because labor force participation has been on the rise. In particular, female labor force participation is improving, which is one of the areas that Prime Minister Abe wanted to tackle, so that's encouraging. Another thing that's encouraging and has implication for wage growth is the fact that part-time labor force participation, part-time share of the labor force employment is decreasing, which is good because one of the reasons why there's been so much downward pressure on especially service wages is Japan's high part-time and temporary share of employment.
And so now the $64,000 question. Does all this indicate that Abenomics is working?
I'd say short term, it's really kicking Japan's economy up. But I do think that the real test comes in the sustainability of this progress and also the external environment. Japan has a lot of, as I said, unique domestic factors holding up and supporting growth in 2013. But if Abe goes ahead with the consumption tax hike planned for April 2014, we're going to have to see a better external demand to sustain this recovery. And the real risk, I think, with Abenomics lies not with domestic factors, because we always thought that domestic demand was going to accelerate. It has to do with overseas conditions. And that's where we have to really look at what's happening in the United States and in China and the rest of Asia.
So things are looking good ahead of the election, but beyond that, is still lots of questions out there.
Yes.
Izumi, thank you very much for joining us. And for more on this, please go to ft.com/markets.